Welcome to the weekly market wrap-up. I'm Hannah Bernard. Equity markets continued their downward slide since last week's holiday shortened trading sessions. Have bearish fundamentals finally caught up with stocks, or is this simply a healthy correction in a long-term bull market? All right, let's get to it. U.S. markets recorded their fifth straight session of losses, with the Dow Jones closing at 15,821 points and the S&P 500 at 1,785. Both indices losing an average of nearly 1.5% from their all-time highs. The Nasdaq also got caught in the fall, skidding 4.84 points yesterday to close at 4,033. Turning to Canadian stock markets, the TSX also took hits throughout the week, closing down 104 points yesterday, giving up nearly 0.8% of overall value. The lone bright spot in the markets was the TSX Venture Exchange, which gained 1.38 points to close at 920. The banking sector played a key role in the downturn in both the U.S. and Canadian markets, as financial stocks lost an aggregate of nearly 1% over recent sessions. Also impacting the markets was the better-than-expected readings on employment and economic growth data, the expected good news to come today from the Labor Department's jobs report, and the buoyed optimism on the economy has led to yet again more fears that the Fed will begin QE tapering sooner than expected. Talking the jobs report, a controversy erupted this week on the heels of a CNBC report that U.S. Census employees have been faking job responses. Citing an NY Post source, it's alleged a census survey taker was making up numbers.
Three questions remain unanswered that we're waiting to hear from the investigation. One is, what is this actual falsification rate? And there is a tolerance for this inside the data. Two, the specific allegation in this case is a supervisor colluding with the interviewer. If you listen carefully to what Eamon was saying, the supervisor is in charge of checking the integrity of what the interviewer does. We don't know what happens. Finally, I think these guys don't quite get. This is a very important number for the markets and for the society as a whole.
Let's turn now to currencies and see how they braved the week. The performance of the U.S. dollar was volatile this week, with the greenback challenging the 81 level on Monday, but softening over the next several days. Traders are closely monitoring the jobs report for directional clues to the overall market. The Canadian dollar closed at its lowest mark in more than 3 years on Wednesday, dropping to 93.40 cents against the greenback. The drop is due in part to an assumption that interest rates are to remain low in Canada for the foreseeable future. The dollar-yen pair also took a hit this week as Fed tapering fears led to speculative sell-offs in Japanese equities. This despite the fact that the Bank of Japan reaffirmed their inflationary policies. The euro-dollar pair reversed trends in the forex market by closing higher based on somewhat hawkish remarks by the European Central Bank president, in which he confirmed that further monetary loosening is not immediately likely. That's it for currencies. Let's turn now to winners and losers and our picks for the week. The winner for this week is Tiffany's, ticker symbol TIF. Shares closed up nearly 11% from last Thursday's session and is up 57% year to date, bucking the recent trends in the overall markets. Although Tiffany's is taking advantage of a divided consumer retail market by targeting high net worth individuals, 11 out of 17 analysts watching the stock have holds, suggesting a lack of confidence for a sustained upswing. The loser for this week is Lionsgate Entertainment, ticker symbol LGF. Shares are down nearly 5% from last week's session, likely due to concerns regarding Lionsgate's ability to remain profitable in a steadily declining industry. Despite the common notion that the film industry is recession-proof, total movie ticket sales in the U.S. have been moving south since 2002. And an increase in R-rated films over the last 2 years is capping revenue potential from demographic segmentation. Now it's time to check in on the rumor mill and gossip heard on the street, brought to you by BayStreet.ca. This week's rumor is about Deere & Company, ticker symbol DE. Deere & Company, which trades on the New York Stock Exchange, has announced that its board of directors has authorized the repurchase of up to $8 billion US worth of additional common shares. We know that some buybacks matter and some don't, but experts express that this buyback is significant if the company's history translates into future actions. The repurchase matters because the expanded plan was described as one which will supplement the existing $5 billion US share authorization that was announced in May 2008. That's enough about this week. Now let's turn to Bay Street's look at the week ahead and the snapshot of what analysts are forecasting for notable companies whose earning reports are coming out next week. Here are 3 U.S. stocks with earning reports coming out on next Thursday. First up is Adobe Systems with earnings per share forecast of 19 cents. Quicksilver Inc. is also out on Thursday with forecasted EPS of just 5 cents. And a must-watch stock, Lululemon Athletica, is forecasted to deliver an EPS of 41 cents. Now checking in on Canadian stocks to watch next week, the Northwest Company's report comes out on Monday, and analysts have forecasted an EPS of 40 cents for their Q3 earnings. P&I Digital Media has their report out on Tuesday, and analysts are forecasting a loss of 2 cents for the fourth quarter. Finally, analysts are forecasting a loss for Whistler Blackcomb Holdings of 21 cents for the report coming out on Wednesday. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News, Crush the Street and BayStreet.ca, I'm Hannah Bernard.